Welcome to the Introduction to Rule Number 1 course. I'm Phil Town, and this is tutorial number 5, Management Owner-Oriented. Management, as far as I'm concerned, is the CEO, and I want my CEOs to be passionate, honest, and owner-oriented. Passion in a CEO means they have a big, audacious goal, some kind of great challenge that they're putting out for the troops that they're excited about, and which motivates the whole company to move forward and accomplish the impossible. This is where we get some major home runs. There's 4 types of these big audacious goals. The first one is a common foe big audacious goal. You've understood this from other companies, like Philip Morris took on R.J. Reynolds, Nike took on Adidas, Apple took on IBM. The second is a target big audacious goal. That is, Sony decided it's going to turn made in Japan into something that means poor quality into something that means great quality. The third is a role model big audacious goal. Let's go be like those guys. Let's be like Nike, but we'll do it in the cycling industry. And the fourth one is an internal transformation. We're going to change our company completely from, say, a defense contractor into a highly diversified high-tech company. So how would we know if we have a company where the CEO has a big audacious goal? Well, let me show you one. This is J.C. Penney. With any company that we're going to look at, remember, it's not a recommendation or advice to invest. Take a look at the Investors tab on any company on their website, click that tab, and you should see the big audacious goal happen really quickly if it's a bag type company. Looking right here in the first paragraph that we see, it says, today, rooted in its rich heritage, J.C. Penney Company is reimagining every aspect of its business in order to reclaim its birthright and become America's favorite store. Now that is a big, audacious goal. The next trait after passion is honesty. Does the CEO tell you about the problems the company's having and spell out the solutions? Do they take the blame when there's mistakes? And do they give the information that you need in order to know the value of the business? Let me give an example of a CEO who does exactly that. All right, I'm at the Whole Foods Market website, and I'm going to go to their investor page by finding the investor tab. I don't see it at the top, so I'm going to scroll to the bottom. There it is, Investor Relations. Clicking on that will take me over to where I'm sure I can find their annual reports. And here I'm on the Investor Relations page, and I go to Annual Reports right there. And then I'm going to scroll down and find an old report and start reading forward from here. So I'll start in 2007 or 2008, looking for the chairman's letter, click on it, and begin reading. What I'm trying to find is information that tells me how to value this business. So there's the financial highlights that help me. How they're dealing with problems. Here's where they implemented certain cost containment measures at the global regional store level. They're talking about their core values. I love CEOs that share values with me, and John Mackey has a great set of values that he runs his company with, and they make sure to point those out in the annual report. If your CEO is honest CEO, they are going to have all the information in this annual letter that you will need to figure out whether this is a great company, whether they're dealing with problems correctly, and what the value of the business is. And last but not least is owner-oriented CEO. That means that the CEO runs the business for our benefit. Now there's 3 key numbers here that really help us know that the CEO is running it for our benefit. The first is return on equity. That's how much money they make on the equity of the company. Next is return on invested capital. That's how much money they make on the equity of the company plus what they borrow. And then finally is how much debt do they have. We like return on equity to be greater than 10%. I like it 15% is wonderful. ROIC at 10% or better, and debt at 3 years or less of earnings. Now, where would we get these numbers? Well, here's where you get them. Go over to rule1investing.com, click on numbers, and scroll to management, and you'll see this form right here telling you what return on equity, return on invested capital, and debt are, and how well they score on a Rule 1 management score. Now you'll notice we're looking at 10 years, 7 years, 5 years, 3 years, and 1 year. We want to see these numbers staying about the same or even growing over time. So it's the over time thing that's the most important here. Now let's go take a look at the website, and I'll show you how to do this live. Okay, here we are in rule number 1. I'm going to put in Whole Foods Market symbol and click on numbers. And this is going to take me to an evaluation of the management numbers that gives us an objective view of how owner-oriented this management team is. First, return on equity we see is running 11, 10, 8, 10, 2, 10, 3, 11, 5. So very consistent. Not huge numbers, but for a grocery store chain, they're huge. ROIC 97917887, 11.4. So it went down a little bit. Now it's coming back up. Again, not as high as we'd like to see them, but for a grocery store chain, huge. Debt is awesome, almost zero. So overall, we get a pretty good Rule 1 management score. And that score goes right up in here, and we see the management team gets a green. So that's how we do it with objective view of owner orientation. This is an owner-oriented company. Now let me show you one more really cool thing to look at. Insider trading is when the guys who run the company are actively buying their own stock, and it's legal as long as they report it on an SEC form. We're going to go to Rule 1 Investing, where we collect all this information, and we're going to find out if the CEO is unloading shares in his own company. In this case, let's go over to MCO. That's Moody's. So we're going to Moody's and we're going to Insider Trading, say go. And what comes up are all the insider trades done at Moody's. How cool is that, eh? Now check this out. We scroll down here a little ways and looking for, let's see. Ray McDonald, he's the CEO. He's dumping shares pretty like crazy. And there's a name that's familiar. How about Berkshire Hathaway, which is Warren Buffett, selling thousands and thousands and thousands of dollars worth of stock. So that's very entertaining. When we see Warren Buffett getting out, gee, what do you think we ought to be doing? So let's summarize what we've learned about management. First, we're looking for passion, honesty, and owner orientation. We're going to be sure there's no insider trading, or if there is, we understand what it's all about. And we'll get the great management numbers from Rule 1 Investing by going over to the Rule 1 Investing website. Now, here's your homework. Go to rule1investing.com, find the management score for your big moat company, and now look at insider trading and see if the CEO is selling. And then go on to tutorial number 6, Margin of Safety Part 1, the growth rate.